Everything looks like they're kind of in danger right now, including Bitcoin, gold, even the stock market. I'll show you guys why. We all know that Bitcoin, gold, and silver are already down, but the only thing that's holding up the market right now is basically the SP 500, or to be more precise, the 30 or 40 stocks that's actually makes up the semiconductors index, because the whole AI bull run, right? Bitcoin, right? I've been saying, I think we should hold above 55K. We should hold above 55K unless we have a collapse in the stock market. And the stock market is basically kind of trying to bounce off the edge as well. We all know how important this green channel is, and the stock market is trying to bounce off here. And here's the thing. SP 500, NASDAQ, they've all been supported by this crazy run in the semiconductors. This is SOX, or the semiconductors index. But you know what just happened? What do we notice here? What do we notice here is that this is the first bearish, right, engulfing pattern in a long time. This is the first bearish engulfing pattern since here. You could say here we had a bearish engulfing pattern, and that led to 3 weeks of dumps, right? 3 weeks of dumps before we went on this run again. So again, charting is not 100%. So look, have a look at this here. This, we could call that a massive topping tail, and we still, right, ended up closing the weekly, beating it above here, and therefore inoculating or making this topping tail ineffective, right? So now we've basically had a massive bearish engulfing tail. That's a big worry. If this index, right, could easily pull back to here, could easily pull back. That's like another 7 to 8% down. If that happened, then SPY could easily come and bounce off 690, try to hold 694. The optimal, as you know, this all affects Bitcoin very much, because if SPY dumps, right, if the SP 500 dumps, then Bitcoin's going to be in a lot of trouble, right? We all know that. So Bitcoin, once again, I think we're in a U-shaped bottom, U-shaped, basically like this, U-shape, like that, and we stay above 55 unless the stock market dumps, right? Save up, buy that bottom, and boom, 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 Bitcoin pumps up to 200,000, 300,000, 400,000, whatever the crazy number is, by 2020. This is 26, so that would be 29. Yeah, by 2029, end of 2029. It's so easy. Investing in Bitcoin is so easy. It's basically 4-year cycle, right? 1 year down. 3 years up, 1 year down. It's exact, right? Exactly 500 days. 500 days from here to here. So then what happens to Bitcoin, crypto, gold, and silver? Before we answer those questions, first let's answer the question of, as I've been saying, the 4-year cycle used to exist, and it's a very strong pattern, because every 4 years, the halving changes, right? When the halving kicks in, then the miners are becoming much less profitable. Imagine because the amount of electricity you use to mine a Bitcoin does not change, right? It's actually getting more and more expensive now because of AI's huge demand on electricity and the power grid. But you are suddenly, after the halving, after these are the halvings, after these yellow lines, you're using the same amount of electricity, but you're getting paid half as much. If you were mining 100 Bitcoin that month, now you get 50, right? And then you get 25. So the miners they can dump less and less, right? Of course, I understand the difficulty of mining a Bitcoin adjusts as the hash rate increases sometimes, but it still means after each of these halving, the amount of Bitcoin you can mine gets smaller and smaller. That just means the miners get less and less powerful. When they dump on the market, right, they become a smaller and smaller force. But you know what's a big force in the market right now? And if you do believe that the Federal Reserve, their money printing, the inflation they're causing is actually going to be a huge problem for you and your family, it's fiat currency abuse. If you do believe that's happening, you know what's much more powerful than the Bitcoin miners are these guys, central banks. Central banks roughly bought 15 times more gold than they actually declared. Right? And this applies to silver as well, because if you are actually trading gold, you can see that gold and silver price pretty much moves up and down at the same time. So if gold makes a big bounce, if gold makes a big run, we all know silver makes a big run. So as I've been saying, the central banks are actually hiding themselves. They've been saying, we bought 16 tons of gold, of which they reported 16 tons of gold, of which 10 tons were bought by China alone. Right? China bought 10 out of those 16 officially declared, but they're saying they're actually hiding it. In actual reality, it's more like 228 tons were never reported, right? 228 tons were never reported. And the reason I've already explained this a number of times before, as we know, for example, China, which is the largest buyer, right, here, they buy through their central bank, which is called the PBOC. That's what they announce, right? It could be a fake number. It could be a fake number. But even I do tend to think they tell you the real number, but that's just a PBOC. What about the CITIC Bank of China or Citigroup of China? Not Citigroup, but CITIC, right? That's like one of the largest hedge funds institutions. What about the Ping An Bank of China? What about the ICBC Bank of China? What about the Ping An Insurance Group of China? What happens when they buy? And you might say, well, that doesn't count as central bank buying. But you see, if you live in America, Citigroup, JP Morgan, Morgan Stanley, Wells Fargo, those are private banks. But in China, all banks are government owned because it's communist. So if all banks are government owned, then basically that's government buying, right? That's government, central government buying. All insurance companies, pretty much all of them are government owned or majority owned by the government. So yeah, the Chinese government could have bought 150 tons of the undeclared gold. They just bought it through their non-central banks, the national banks, right, or regional banks. They're all government owned, or they're insurance companies, and they say our central bank only bought 10 tons, and that's absolutely true. But this number is from World Gold Council. The if you want to do the research, they actually show you how they estimate how much gold was actually bought. I've been showing folks a chart which basically says that gold is probably, judging by historical averages, bottoms somewhere in first or second week of July, somewhere in early or mid July, and the price it bottoms at is probably somewhere around the 3,900, right, or slightly lower. So we're kind of pretty close. This now is one of the most accurate charts I've seen, and we can see why it is, because look at this. You see the green line here. The green line is basically the 10-year treasury yield, right? And gold kind of just reacts to it, right? Gold just follows and reacts to it. And folks in my Discord know this. I used to say that the gold used to react, or is very sensitive, super sensitive, to the US 10-year treasury real yields. Real yields. Here it's not the real yield, but sometimes it's a close approximation. But it's inverted. So that means this inverted means upside down. We turn it upside down because then we can easily compare. When yields are getting high, say 4.7, 4.8, right? Gold price dumps. When yields are getting low, see when it goes from 4.5 to 4.6, 4.3, 4.5 to 4.3, because it's upside down, right? Then gold prices bounce, right? Same here. When yields go from 4.3 to 4%, right? When it goes down 30 basis points, then gold price goes up, right? So this relationship was almost one-to-one. And in fact, gold, right, called this dump in this spike in US Treasury bonds. It basically came down first, and then yields followed. Yields came down first, then gold followed, right? And now yields are up again. Yields are up 30 basis points. Down. It's upside down. Yields have gone down because inflation's going down, because oil prices are going down. So therefore, we could expect the gold to bounce to this level, which equates to about 4,500 or 4,600. It's at 4,000 right now. That's a 12 to 15% bounce according to this chart. And one of the big reasons is because oil price is down, right? Where is the crude price? It's here, right? So what that's reflecting is basically in the last 3 or 4 weeks, boom, 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 right? Oil price has come down. And when oil price is down, we know that's the major driver of inflation expectations in the US. So therefore, right, US 10-year yields go down because this is upside down from 4.67 to 4.37, and therefore gold could bounce from here. People like semiconductors right now, as I showed folks, right? Semiconductors are doing really well right now, but that's the chart I showed you guys at the start of the video. Semiconductors index, whether it's in US or in China, right? They've both been doing well. But look at this. Semiconductors, by the way, this is making up, they're making up 24% of the SP 500. So this is global equities. This is mining industry as a percentage. So if you tally up all the gold, all the mines, not just gold mines, but all the mining, copper, gold, silver, uranium, whatever, all the mines in all the countries around the world, like including China, Canada, Australia, right, compared to the total of their stock market, right now it's basically 1%. 1%. It's the lowest like in history. Wow, this is since 1900. It's the lowest in history. Like in the 1930s, we thought that was low, but it's just being ridiculously low for all this time. And at its peak, it used to be around 10% to 11%, right? 10% to 11%. Now it's at 1%. And you know what's really high right now? Semiconductors as a portion of SP 500 is 1/4, like 1/4 of all, where is it? Yeah, the semiconductors in the US makes up 1/4 of the entire SP 500. 500 companies in there, right? You have finance, you have consumer staples, you have power grid, whatever. But this one sector, semiconductors, makes up 24% of that. I'm not calling for a top in semiconductors, but it just seems like mining, right? Whether it's gold miners, silver miners, lithium miners, which I think has a lot of room to run. Copper miners, I think has a lot of room to run. Uranium miners, I think has a lot of room to run. They all have a lot of potential. Look at this, for example. This is tungsten. Tungsten is, what you put in the light bulbs, right? Remember Thomas Edison tested like 1,000 different materials for the light bulb, and in the end he decided to use tungsten. It's also one of the hardest materials in the world. I think they use it for a lot of military use as well, and its price has shot up from around 200 something to basically 3,400. It's basically like 10x run or 12x run, whatever, in 18 months. So that's what happens when there's not much investment into mining. So suddenly, the world suddenly finds itself short with a massive shortage. It decides we need tungsten or we need silver because we need to build a lot of electricity and power grids and EVs for also we need to build out the AI infrastructure. So suddenly prices can skyrocket. Okay, thank you for your time, guys. I'll catch you next episode.
Pablo posts every call in the Discord a full day before it hits YouTube. If you want them first, the link's in the description.